Hello, my awesome accounting students. Welcome back for the second part of the cash chapter. In this chapter, our primary focus will be on the bank reconciliation process. As you know, that's a major internal control that we have over cash. Cash is our most liquid asset and the asset that is most highly sought after by other people who would want to have it. And so we need to pay particular attention to the internal controls concerning the cash account. There are lots of terms and definitions in this chapter. Make sure that you take a look over the glossary of terms. At the last count, I think there were over 25 of them. Endorsements is one of the important terms in the chapter. An endorsement transfers the negotiability of a check. On the screen, you see examples of a full endorsement, a blank endorsement, and a restrictive endorsement. Know the differences. There are typically three parties to a check: the payee, to whom the payment is made, the drawer, on whose check the money is being drawn out of, and the drawee, who is typically a bank or a credit union. This chapter was filled with internal controls that are necessary to safeguard our cash account. One of the most important things that you'll learn in this chapter is how to reconcile your cash account. To reconcile means to bring together. Just as in a human relationship, two parties that have differences between them may reconcile. That means that they come together and they get rid of their differences. So it is with the bank reconciliation. We will take the bank's external documents called a bank statement. Nowadays, we can pull up a bank statement whenever we feel like it online. On our record, someplace we're keeping track of the cash. That may be in the general ledger account. It may be in a Quicken program if you're using Quicken to record your cash. It may be in QuickBooks. It may even be in a notebook. Wherever it is where you're recording your cash transactions, our goal is to take those book records and bring them together with the bank records. This is the process of creating a bank reconciliation. As you saw in class, there's two sides to the bank reconciliation. There is the bank side, and on the opposite end of the spectrum are the books. On the bank side, we want to take a look at what our bank statement starts with, and we want to add in deposits in transit, and we want to subtract out outstanding checks. The only other thing on that side will be the bank errors. On the book side of the house, we want to start with the balance per the cash account, wherever that may be. We want to add in things that our bank may have added in that we don't know about. Common things are collections of a note and possibly a few cents of interest. And then we want to take out the things that the bank has taken out that we may not know about. Common items include fees for various types of banking transactions, as well as NSF or non-sufficient funds checks that we would have received from our customers. It's important that you take the time to memorize what the bank reconciliation looks like. And if you're enrolled in my class, you probably heard me say that the most important thing we're going to do throughout the entire accounting course is learn how to reconcile our bank accounts. So take this seriously. Let's go over the process step by step. On the screen in a side-by-side presentation is a set of bank records on the left and a set of book records on the right. On the bank side, here's the balance, $7,323.50. On the book side, the given balance in the problem is $8,134. We'll walk ourselves through the steps of a real live bank reconciliation. Step 1, make sure that any items from the previous month have cleared the bank. In this case, since the starting balance was the same at the beginning of the month, we can be sure that there is no need in this case to apply the first step. Step number 2 is to compare the deposits step by step. Check each deposit off if it's cleared and circle it if it hasn't. In this case, the first deposit for $500 matches the books, check it off. The next deposit for $410 matches the book, check it off. The third deposit for $730 matches the books, check it off. And you'll notice that there's no more deposits on the bank side, but there is a $900 deposit on the book side. This is a deposit in transit. It is a reconciling item, and so we need to carry it forward to our bank reconciliation. The next step is to compare the withdrawals or the debits or the checks. If they match, check them off. If they don't match, circle them. In this case, check 104 for $100 matches. Check it off. Check number 105 for $10 matches. Check it off. The next one for $200 matches. Check it off. The next one, 106 for $225 matches. Check it off. The next check for 109 for $60 matches. Check it off. The next check for $16 matches. Check it off. The next check, 111 for $80 matches. Check it off. At the bottom, you'll notice two items on the bank side that doesn't match. The $118 is an NSF check from a customer. The beginning of the problem tells us that the name of the customer is Annette Cole. So we'll make a notation. That's a reconciling item that we need to include in the bank reconciliation. Another item that doesn't show up on the book side is this service charge that the bank charges for in the amount of $7.50. Since it doesn't match, circle it. Moving over to the book side of the house, we notice that there's a few transactions over here that haven't cleared or that aren't checked off. Check number 108 in the amount of $75 has not yet cleared the bank. This is the definition of an outstanding check, a check that we've written and recorded in our records, but it hasn't yet cleared the bank. There's a second check, check number 112 for $140, which represents another outstanding check, a check that we have written and recorded in our books that hasn't yet cleared the bank. So in this case, our purpose will be to bring together the two cash balances. The bank balance of $7,323.50 needs to reconcile to the book balance given in the start of this problem as $8,134. We ran through the steps of the reconciliation process, checking off the things that matched and circling the items that don't match. The circles are the ones that we're concerned about. Again, the goal of a bank rec is to bring the two balances together. So let's check out where these circles would go on a formal bank reconciliation. My suggestion is that you chicken scratch out what a bank reconciliation looks like. Here's the bank reconciliation for Peter Chen, attorney at law. In the previous section, we compared his bank statement balance with his books, and we had 5 circles when we made the comparison. Those 5 circles are shown on the bank reconciliation. On the bank side, there was a deposit in transit. That was the amount that was deposited on our books but hadn't yet hit the bank statement. This often happens near the end of the month. There's the 2 outstanding checks that we circled. Those were checks that we had written and had been taken out of our cash account, but because the bank hasn't yet cashed them, they show as a reconciling amount. On the book side, there's 2 circles. These are amounts that the bank took out of our account that we didn't know about. In this case, there was a service charge for $7.50 and an NSF check from a customer named Annette Cole. Both of these balances brought the cash per books down. The whole purpose of this bank reconciliation was to bring the 2 balances together, and if you check out the bottom line, we did just that. The last step on the bank reconciliation is to make adjusting journal entries for anything that shows up only on the book side. The things on the bank side are timing differences and they will resolve themselves. But the items on the book side need to be recorded in the journal to bring our cash balance from $8,134 down to the $8,008.50. Here are the journal entries for those adjustments. All the journal entries from the bank reconciliation affect cash. In the first journal entry, we recorded the bank fee expense, and in the second journal entry, we recorded the NSF check from one of our customers. We also covered online banking. Many businesses now manage a significant portion of their cash activities using online banking. Online banking offers many features to make businesses more efficient. Take a moment to review how electronic fund transfers are handled, how payments to government agencies, customers, and vendors are handled, and as you know from your personal experience, many new security alerts are available to let us know when specific types of activity occur. This chapter is an extremely important chapter in this course. Invest the time and spend a little bit longer on learning how to reconcile the cash account. This is Professor Johnson signing out.